Hi, this is Professor Higgins, and welcome to Lecture 8 of our Business Organization course here at Valencia College Paralegal Program. This is going to be part 1 of our Lecture 8 on Introduction to Corporations. Um, the rest of the semester is going to be focused solely on corporations in the state of Florida. And so, Lecture 8 is an introduction to the rest of the semester, and it will be a broad brush stroke over everything that we are going to examine in corporations for the rest of the semester. So, we will take, beginning with Lecture 9, we'll kind of drill down into the aspects of corporate law in Florida. So let's get started with a brief introduction. Corporations have been around for literally hundreds of years. I know it's shocking because we think of them as such kind of a modern tool in business, but they have been around, and the purpose for corporations, even back 300 years ago, was to protect the owners from personal liability. That if there was a problem with a creditor, the creditor would be able to go after the corporation to get recompense, but they could not come after the owner of the corporation. Prior to the use of corporations, persons engaged in business faced the possibility of unlimited liability. Corporations basically attempted to eliminate this risk. They allowed people to risk only what they invested. You might lose whatever your investment in the corporation was, but no more. Today, corporations are extremely popular and profitable. They are the most profitable business entity currently in the state of Florida. I'd like to start out with the definition of corporation, and then we'll take each bit by bit, piece by piece, and talk about it. Corporations are a separate legal entity created by statute, which is distinct from its shareholders, and which exercise the same rights and privileges as a natural person. Okay, when we say that a corporation is a separate entity, that means that it's separate from its owner. The owner can be protected from liability because it is separate, and the corporation itself will be liable. It is created not only by one statute, but there are many, many statutes that govern corporations. So we're going to talk about some federal statutes. There are state statutes, and it's really a complicated structure, but there are many benefits. Okay, which is distinct from its shareholders, because the shareholders are the owners, and which may exercise the same rights and privileges as a natural person. Okay, let's talk a little bit about the organization, the very basic organization of a corporation as far as ownership and its running. You have the corporation, and within that corporation, the owners of the corporation are the shareholders, and you can have many, many, many shareholders. So up at that top level, the owners, you have many shareholders, and even though they're owners, they do not do anything as far as the running of the corporation, except for the fact that the owners elect the board of directors. Now, underneath the level of shareholders, you have the board of directors, and you may have 7, 9, 11, however many board of directors you have, those are the individuals that kind of make sure they push the corporation along on its mission. They do big decision making. They encourage and enforce things to happen with the corporation that they feel like will benefit the shareholders. And then the board of directors, they elect or appoint the next level down, which is the officers, the president, the vice president, the secretary, treasurer. These are the folks that are running the corporation on a day-to-day basis. So they're making sure that the corporation is running. They answer to the board of directors, and the board is the one with the big idea. That's where the big ideas come from. However, they're not necessarily owners. Often the board of directors are shareholders as well, but they don't have to be. In fact, in the state of Florida, you can have a corporation with one shareholder, one who is the same person as the director, the board of director. And then that person can also be the president, vice president, secretary, and treasurer. You can have all of those wrapped up into one person. That's generally a very, very small corporation. Usually it's not run like that, but just to let you know that it can. Okay, so let's talk about, I'm going to go first to the board of directors because they are, let's do the shareholders first because they're the owners. A shareholder is simply a person who owns stock in a corporation. Okay, very easy to do. You can go online, Schwab, any of these stock companies, and you can purchase a single share or 10 shares or a piece of a share online. And then you are an owner of a stock. You can own Apple, you can own Microsoft, you can own, General Electric. If you want to be an owner of Disney, you can go buy a stock of Disney, a share of Disney. That's all it takes to become an owner. Like I said, you do not have any decision making. You don't have any control or authority to do anything as far as making the company do anything, but you are an owner. And the one thing that you can do is if you don't like the way things are running as a shareholder, you can vote out your board of directors because they are elected by the shareholders. The next level is our board of directors. The board of directors is the controlling body of the corporation who elect the officers, and they make major corporate decisions. They usually meet once a year, and they are elected by the shareholders. The officers are elected officials who run the corporation on a day-to-day basis. They usually include the president, a vice president, secretary, and treasurer. They are elected annually by the board of directors. And in Florida, one person can hold all of these offices. The registered agent. Now this, everyone, you should know by now. A registered agent is the person designated by the corporation to receive legal papers on behalf of the corporation which are served upon the corporation. The registered agent should be available at the registered office weekdays between 9 and 5. Now, I have two other things here in the definitions. The first one goes to the formation of the corporation. The articles of incorporation. Incorporation, the articles of incorporation. So when you are creating a corporation, you are incorporating. The articles of incorporation are the document that is filed with the Secretary of State to start or form a new corporation. So these are the documents that are going to say, hey, world, guess what? We are now a corporation. There are also something called the bylaws. We generally talk about the articles of incorporation and the bylaws. The bylaws are the rules pertaining to the structure and the operation of the corporation. The bylaws are basically the law of the corporation. If someone comes to you and says, hey, this is happening in my corporation, is this legal? Well, you first have to say, let me take a look at your bylaws and I'll tell you if what you're doing is okay. The bylaws are not filed with the Secretary of State in the state of Florida because a lot of times the way that you run your business, the way that you operate things, how everything is structured is kind of like a trade secret. You don't want everyone to know how you're doing things because then they might start just, run down to the Department of State, pull up your bylaws, read them, and open a company and run it the same way, and then become your competition. The articles of incorporation they're used to set up the corporation. They are to form a corporation, and they have to be filed with the Secretary of State or the Department of State. The bylaws are the laws of the corporation on how you're running things, and those do not have to be filed. Okay. The governing law when it comes to corporations, there's state laws that govern corporations, and there are federal laws that govern corporations. In our state laws, Florida Statute 607 is the Florida Business Corporations Act. It is based upon the Model Business Corporations Act that many states in our country are based upon. We also have a chapter 517. This is a Florida statute that is the Florida Securities and Investor Protection Act, the Florida Blue Sky laws. So we have two different areas of our Florida statutes where statutory law governs corporations here in the state of Florida. In addition to statutory law, there is also administrative law. In the state of Florida, we have the administrative regulations from the Division of Corporations of the Secretary of State and the Department of Banking and Finance. So not only do attorneys who do corporate law have to understand all the Florida statutes that apply, but they also have to understand that there are administrative rules and regulations that corporations have to follow. And this is just on the state side. Federally, there are also a couple of acts that I want you to know about. Number one, the Securities Act of 1933. This is when a corporation wants to sell stocks. This is the act that they have to follow. This is not the act that they have to follow as in performing, but it's the authority that they have to subscribe to make sure that they do it correctly. And then the next year, the Securities and Exchange Act of 1934 was set out if you want to resell those shares. In 1933, they set up rules for selling shares, and then once the shares are sold and people wanted to sell them to someone else, then this is when the Securities and Exchange Act of 1934 came in. All right, also, just like in the state of Florida, there are administrative acts that you have to follow. Administrative regulations of the Securities and Exchange Commission. If you've heard of the SEC, not the football conference, but the Securities and Exchange Commission, this is what people are referring to, and corporations cannot violate any of these SEC regulations. All right. Now, in addition to the statutory, state, federal, and the administrative laws, there's also common law. And because corporations have been around for over 200 years, we have a lot of common law. And remember, our common law we go all the way back, and then you can cross the ocean back to England because we came from the English common law as opposed, remember, to the French civil law, which we do not follow. Um, so if you are going to be a paralegal who is practicing in a corporate environment, you are probably going to end up doing a lot of legal research in case law. All right, so what makes a corporation a corporation? Specifically, what are the characteristics of being a corporation? Well, the entity status. A corporation is an artificial person under the law. It exists separate and apart from the shareholder, who is the owner, like we discussed in our definition. It may hold property in its own name. It can borrow and lend money in its own name. It can enter into contracts. And it is liable for debts and torts that are committed by its agents. So when you think of a corporation, the corporation pretty much can do almost anything that a natural person can do. Number two, another important characteristic of the corporation is the limited liability of the shareholder. A corporation is responsible for its own debts. Therefore, the shareholder's liability is limited to the amount of their investment only. That's the only money they can lose. They cannot be, a creditor cannot come after a shareholder if the corporation does not have enough money to satisfy the debt. Number three, free transferability of interest. Well, ownership interest is represented by shares which are easily transferable. All you have to do to transfer your interest in a corporation is sell your shares. You just sell them. You call the broker and you say, hey, I want to sell all my shares of Disney, and they say fine. By 4 o'clock that afternoon, when the market closes, your shares will be sold, and then the next day it's a bit of a process, but then within 24 hours you have your money and someone else owns your shares. All right, number 4, centralized management and control. Management and control of a corporation's affairs are centralized in the board and the officers acting on the board's authority. Thus, a shareholder really does not have the power to participate in management other than electing the board. That's really as active as they can get. Number 5, the continuity of existence. Corporations exist far beyond the life of a human being. The corporate existence continues regardless of the death of its shareholder, any of them, all of them, the incapacity of a shareholder, or the transfer of shares. Basically, in corporations, we have what is known as perpetual existence, or the corporation will exist in perpetuity. That means it never dies. And so unless there is something that is done to actively close down the corporation, it's just going to keep on chugging. All right, piercing the corporate veil. I know we've just talked about how great corporations are because the shareholders are all protected from unlimited liability. And because this is such an important feature of the corporation, I want to hit you right off the bat with the term piercing the corporate veil. Piercing the corporate veil means that you have this veil of a corporation, and the creditors cannot pierce that veil to get at the shareholder. Okay, they can get to the corporation, but they can't pierce the veil that protects the shareholder from personal liability, unless, and there are some very specific situations where the corporate veil can be pierced and creditors can come after those shareholders. And the reason that I think the book puts this right right up front for paralegal students is because most of the protection against piercing the corporate veil is done by the paralegals. So it is so important that you as a paralegal understand how important it is that when you're given a job by your attorney to do something for the corporation, that you do it absolutely correctly. Okay, piercing the corporate veil. There are certain circumstances under which a corporate identity may be disregarded and the shareholder may be considered personally liable for its debts and obligations. This is referred to as piercing the corporate veil. Courts look at the following criteria to determine whether to hold a shareholder personally liable. Okay, number one, and this is a big one for paralegals, lack of corporate formalities. The corporation must properly incorporate. It must properly issue stocks. It must hold meetings. It must file all the reports necessary. At the meeting, every time that there's a meeting, there must be minutes taken so we can determine what happened. They have to elect the board and the officers. Usually all of this stuff is the paralegal's job. So it's very important that when you're doing this, especially for the first time, that you ask lots of questions. Okay, let's see. Number two, the commingling of corporate assets with personal assets of the shareholders. Okay, if someone is using corporate funds to pay private debts, that's commingling. This never can happen. You need to have two separate accounts, one for the corporation and the corporate assets, and then one for your personal assets. And this is true whether there's one shareholder or 25,000 shareholders. It's not a good idea to have to use the same bank. Now, it's done, but it's not illegal not to. You can keep your assets or your money in the same bank as a corporation. And if you own lots of stocks in lots of different corporations, then it's virtually impossible, I guess. But it's better if you don't, so that the bank doesn't get confused. Because if the bank gets confused, then they're not in trouble. You are. You're the one that has to keep an eye on that. I wanted to mention there was an example of there was a woman who owned a corporation. She was the sole shareholder. And when she was low in money, she would pay her bills with the corporate money. When the corporation was low on cash, she would pay the corporation's debts with her personal money. This kind of commingling is a disaster, and it will set you up to have the corporate veil pierced, because basically there's no corporation if you are able to, when you go back and forth and commingle funds like that. All right. Number three, another way to pierce the corporate veil is when there is undercapitalization. The corporation was not organized with sufficient resources to meet the obligations that reasonably could be expected to arise. So if you set up a corporation and you spend a lot of money, and the corporation did not have the money, it was undercapitalized, then when the creditors come for their payment of their services or goods or whatever the corporation purchased, and it's not there, then in that case, the creditors can go after the shareholders. If it initially was set up and there was undercapitalization, they did not have money to do the things that they were going to then try to do. Number four, this is an easy one, fraud. You can pierce the corporate veil can be pierced if the reason that the corporation was set up was fraudulent. If it was just a scam, then automatically the creditors can absolutely come after the shareholders. Who may attempt to pierce the corporate veil? Who wants to do this? Well, generally, like I've said, it's the creditors. If the corporation has purchased a bunch of items and then they don't pay, it's creditors that are looking for their money that are going to come after the shareholders. Now, another entity that is very, very well known for piercing the corporate veil is the IRS. If the IRS thinks that there's anything shady going on, they can absolutely pierce the corporate veil, and they do so quite often. All right, there's a good case about that kind of laid out all of the ways to pierce the corporate veil, and I've got it in here. It's Dania Highlight Palace Inc. versus Sykes. It's a good case. So if you want to take a look at that, it's very interesting. Okay, now I want to talk about the types of corporations. There's different classifications, and we're going to go through a couple of these, and then I'm going to wrap up part one of this lecture. But types and classification of corporations. A person desiring to form a corporation must first choose a state in which to incorporate. Now, they can either form a Florida corporation, or they can be a foreign corporation that just wants to do business here in Florida. However, Florida is one of the top 5 states. We're one of the top 5 friendliest states towards corporations, and so many folks do choose to start their corporation in the state of Florida. But if they don't, they can form a corporation in another state and then just register to do business in Florida as a foreign corporation. After the person decides, after whoever this is decides which state they want to start their corporation in, they choose whether or not they want to be an S corporation. An S corporation is a corporation created by the Internal Revenue Code, Section 1361, and it is called a subchapter S corporation. The characteristics of an S corporation, I usually think of them as S being small, a smaller corporation, because it's a corporation that pays no federal or state income taxes as a corporate entity. It's taxed at the shareholder's individual tax rate, and it's only taxed once. See, typically, if you are taxed as a corporation, then you are taxed, the money that comes in is taxed at the corporate rate, then it goes to the shareholders, if whatever their profit is, and then when the shareholder sells that share, they pay taxes again. But if you are an S corporation, then you only pay taxes when you, as the shareholder, sell it. Okay, the S Corp is utilized by relatively small businesses, and they're able to, as I said, just stated, to avoid double taxation. They do not have to pay the Florida corporate income tax. Shareholders who do not materially participate in the business cannot deduct losses. Now, this is a lot of times a regular corporation has a lot of fringe benefits that they get to deduct. Well, because they're not charging you a corporate tax rate, you can't deduct anything. So it's very important when you're making the decision to become an S corporation or not that you speak with an accountant so they can give you all of the pros and cons of being an S Corp and then all the pros and cons of not being an S Corp. Some fringe benefits may not be tax deductible. Okay. Qualification to be an S corporation. The biggest one is you cannot have more than 100 shareholders, none of whom are aliens or corporations, and all of them consent to the election. So when you have an S Corp, you can't have any corporations being shareholders, and you cannot have anyone that is not a resident of the state of Florida a be a shareholder. You can only have one class of stock, which really isn't that big of a deal. You can only have U.S. taxpayers or residents of the state of Florida to be shareholders. You must see an accountant. There is no limit to the number of employees for an S corporation. So keep that in mind. Even though the corporation might be small, you might have a large number of employees. You just cannot have more than 100 shareholders or owners of the S corp. The procedures to become an S corporation. You have to file a form 2553, and 2553 says, hey world, I'm going to be an S corp. You file the 2553 with the IRS before the end of the 15th day of the third month, which is basically March 15th, of the year that you want to be an S corp. So you have to do this every single year by May 15th if you want to be an S corp. Every year you must file an informational return with the IRS. Now, remember I said you don't have to pay income taxes because you're going to let it pass through if you're an S corp. But of course the IRS does want to know how much money you're making, because what they're going to make sure is that in your informational return you have an S corp, and let's say there's 3 shareholders, and you say each shareholder received $20,000 this year. They're going to make sure in the individual tax returns that each of those shareholders reported the $20,000 that they earned and paid taxes on it. Okay. The last thing I want you to know, this is kind of interesting. You can choose at any time to be an S corp. When you're going along, generally people start out as an S corp. Then you can switch to a C corp. That's kind of the big daddy corporation that we usually think of. So if you want to become a C corp because you're making a lot of money and you want to provide a lot of fringe benefits and you want to be able to deduct them, then you can become a C corp. But once you change from an S to a C, you have to remain a C for 5 years. You cannot go back just because you get up there and you go, oh, I don't like this. This isn't what I thought it would be. You're stuck there for 5 years, and then you can, after 5 years, you can go back to being an S corp. Okay. Speaking of C corps, what are the characteristics of a C corporation? A C corporation pays taxes on its net earnings at the corporate rate. Now, when you're a C corp, you're going to want to shop around and see which state has the cheapest tax rate, because we here in the state of Florida, our current tax rate, I believe it was 5% for years and years and years, and then recently, maybe 2019, it went down to 4.458%. So it's a very low percentage of taxes that corporations pay here in the state of Florida. That's one of the reasons we're in the top 5. California, for instance, just right off the top of my head, their corporate rate is 13%. So anything that the corporation makes, 13% goes right back to the state of California. And then remember, the IRS is going to charge an additional 21% to each corporation, so that they will have to pay the federal government 21%. And 21% is much cheaper than President Trump brought it down to 21%. Prior to that, it was up near 40%. And I think it may be headed back up that way. The reason that 21% is not a bad way to go is because, number one, it's going to encourage people in the United States to form corporations. But when it gets up to like that 37.6%, when it starts getting really high, over 25-30%, companies in the United States leave and they go to other countries, and they hire people for much lower wages, and they pay the governments of other countries much less in taxes. So we want to keep our corporations here in the United States to benefit our population so that they have employers here, and so that when they're making money, that 21% is going back into the United States. The United States government is collecting that money because, let's face it, the United States is generally we're a bunch of consumers. And so if a company goes to another country, they're still selling to United States people. So I think we should keep it over here. We should keep our corporations here in the United States. Let's see. Characteristics. Pay taxes on its net earnings at the corporate rate. B, the salaries of officers, directors, and employees are deducted from the income, so they are not taxed to the corporation. Note, I've got a note in here I want you to read. Many corporations take all the profits out to pay salaries. But if the IRS thinks that the salaries are too high, the salary can be considered a dividend and it will be subject to double taxation. So that doesn't always work. C, money paid out in dividends is taxed twice because it's taxed while the corporation has it, and then once the dividend is paid to its investors, to the shareholders, that shareholder, when they sell it, they are going to have to pay taxes on it again. And then, of course, some fringe benefits are deductible, like health, accident, and life insurances. Once you are a C corporation and you are paying these taxes, there are things that can be deducted so that your net profits are not as high. All right, let's take a look. Oh, I still have a little bit more here. If you are not an S corporation, if you don't file the, what was it, a 2553? Yeah, the 2553. If you don't file that, then you are considered a C Corp. There's nothing that you have to do to say, hey, I want to be a C corporation. You only have to do that to be an S corporation. If you don't file that form, then you will be a C corporation. This looks like, let's see, what's our time look like? Okay, this looks like a good place to stop part 1 and come right back because I'm going to have part 2 posted of lecture 8, and we will begin on professional service corporations. All right, thank you for your time, and I'll see you in a minute.